Yeah, you don't know all the shit that I've been through, all the pain and the struggle that I lived through. Now I'm rolling up these papers that I smoke through, thinking about all the shit that I've been through. You don't know all the shit that I've been through, all the pain and the struggle that I lived through. Now I'm rolling up these papers that I smoke through, thinking about all the shit that I've been through. Now I'm sipping on this whiskey, got one chance and it's risky, so you can't play around. And I got my team behind me like a background. I don't ever back down, picking up the slack now. Now I'm focused, keep on grinding for my stacks now. I'm feeling lost in this ocean, where's a lighthouse? I keep on swinging for the fence and I ain't strike out. And yeah, that's how I'm feeling, yeah, that's how I'm feeling now. We're not here for a long time, yeah. It's 9 to 5, it's a long grind, yeah. A ladder to success, it's a long climb, yeah. Now I'm sitting here making up for time, yeah. Man, I took so many losses that I lost count. I didn't know what I was made of, but I found out. And this life will blindside, you better look out. These haters wanna see you fall and get you took out. Yeah, cause I fell on my face, and this life is a race. I keep on checking my place. Now I'm riding for my team, you can tell by my plates. And this life just threw a hook, it caught me right in the face. But I'm getting back up, I'll do whatever it takes. I'll climb a couple of mountains, I'll swim a couple of lakes. Don't got time for the bitching, don't got time for complaints. Now you going through some shit, now tell me, how does it taste? You don't know all the shit that I've been through, all the pain and the struggle that I lived through. Now I'm rolling up these papers that I smoke through, thinking about all the shit that I've been through. You don't know all the shit that I've been through, all the pain and the struggle that I lived through. Now I'm rolling up these papers that I smoke through, thinking about all the shit that I've been through. Now I'm living with my choices, I just own my mistakes. Cause I'm screaming fucking hand down, I ain't searching for breaks. But I'm barely treading water and this life is the lake. Now the pressure keeps on building as I'm raising the stakes. I ain't looking for advice, now I'm looking for space. Now I'm dealing with these losses, but I know I hate the taste. Now I'm sitting back, I'm thinking as I smoke it to the face. Now it's time for these apologies, the time it's too late. So bygones be bygones, I'm on business with a tie on. So fuck a shoulder to cry on, I'ma get a hopper like Zion. Let's raise a glass, I'll toast that. Reminisce, we roast that. How I wrote them and ain't wrote back. I'm never flimsy, the goat's backs. I don't feel bad, no not at all. With a lot of years, write a lot of calls, a lot of birthdays without a call. Ain't got time for that, so fuck a fraud. You ain't there for me, I ain't there for you. You won't bleed for me, I won't bleed for you. All the hard times I lived through, keep moving, gotta get through. I got goals and cash I gotta get to, all these memories that I flipped through. If you can't relate, then don't judge. I'll stand my ground, I won't budge. I'm sitting back cause I burn buds, I swear to God this life's good. You don't know all the shit that I've been through, all the pain and the struggle that I lived through. Now I'm rolling up these papers that I smoke through, thinking about all the shit that I've been through. You don't know all the shit that I've been through, all the pain and the struggle that I lived through. Now I'm rolling up these papers that I smoke through, thinking about all the shit that I've been through.
There we go. We got microphone working. Amateur hour over here at Boss Blunt's Think Tank. Welcome, everybody. It's Marcel Kalinovic, Butcher Wall Street. Forgot to plug in my microphone, of course. But hey, it is what it is. Thanks, Grandpa Barney. You're too kind. Appreciate the super chat. Grandpa Barney says, I'm grateful to be known as one of the degenerates. Much love, my fam. God bless us. God bless you, Barney. You are truly something special, my friend. When he says degenerate, for those of you that may not be aware, Grandpa Barney is talking about a retail investor. And that, more specifically, a retail investor who believes strongly in heavily shorted meme stocks and precious metals and so on. And I also very much believe in what is to come here with over-leveraged hedge funds, prime brokerages, and banks. Regardless of the current bull run in this bear market, we're going to talk about that specifically. European recession has now been confirmed. Jeremy Grantham, also goes forward and tells us that the majority of the stock market crashes happen after the Fed pivot. We're going to look at hedge fund managers masturbating on strippers. Not physically look at it, just look into it. And then we're also going to delve a little bit into some of the manipulation that's going on in markets against meme stocks. That being the case, let's just get right into it, my friends. After the end here, if you guys want to throw questions my way, I'll be more than happy to answer any questions. But take a look at this article from Reuters. Eurozone saw a winter recession and more challenges ahead. The governments have and central banks have just stepped forward and revised European GDP and have realized that even though the United States may have avoided a technical recession so far because they changed the definition of recession, Europe's luck has run out. According to the latest data revisions that we've seen here by the European Statistic Agency at Eurostat, the Eurozone economy was in a technical recession in the first 3 months of 2023, and downward revisions of growth in both the first quarter and the final quarter of 2022. The GDP for the 20 countries in the Eurozone fell in the first quarter, 0.1%, with the fourth quarter, 22 was up 1% from the year earlier. But this was the second consecutive decline after the fourth quarter 22 GDP print was also cut to negative from a previous reading of 0, and the first 6-month contraction since the COVID-19 pandemic. Peek this. Revised numbers were below the flash estimates of positive 0.1 and 1.3% that were published in May, and economists forecasted on average respectively 0 and 1.2% expansion. That has now been proven completely false. Take a look at this. So the Eurozone's first quarter weaknesses were down to a drop in government and household spending, with inventories making negative contributions. Negative contributions in inventory. And actual trade supporting their output. So you can look at this chart and see the negative GDP in Estonia, Lithuania, Netherlands, Ireland, Greece, and Europe's largest economy of Germany. So, Germany being Europe's largest economy shows that they were in a recession in the beginning of 2023. Meanwhile, there was also contraction in Ireland's economy, and due to the impact of large multinationals' growth. So much of Irish GDP, for those of you that are unaware, is a function of how much tax evasion occurs from giant corporations. Okay, because a lot of corporations do this in Ireland. So along with Germany and Ireland, GDP also declined quarter over quarter in Greece, Lithuania, Malta, the Netherlands. And this is a sneaky downward revision that happened after the fact and is a continued trend that has been observed first under the Biden administration of releasing laughably stronger than expected economic prints initially, and then quietly revising them after the fact several months later when nobody cares. So a recession had been expected towards the end of last year as the Eurozone fought with energy and food prices and the post-pandemic spending boom that completely faded along with the stimulus. But initial estimates had suggested that they avoided recession, and apparently that is not the case. Not the case whatsoever. So S&P Global Market Intelligence said it forecasted a pickup in the second quarter led by services, followed by a slowdown and a risk of a new recession in late 2023 or 24 as tighter financial conditions took effect. And we're all seeing this from central banks around the world raising rates, from the Securities Exchange Commission making major changes in the cryptocurrency, and also the United States Treasury in issuing T-bills, which will suck trillions of dollars out of the equities markets. So there may be a slight rebound, but it is not looking good for Europe or the United States at this point. So even though they injected billions of euros into the economy, there's going to be major disappointments from the government. They still failed to avoid a technical recession, right? And this was evident in the lack of movement in the euro or in the market implied rate changes. Take a look at this. There's another hike expected next, and then a terminal rate expected in July. And it does not look, it looks like rate cuts are priced in for 2024 currently. But this comes as Jean Lagarde of the European Central Bank warning earlier in the week that there are no signs that inflation has peaked yet. Yes, the European Central Bank leader has warned earlier that there are no signs that inflation has peaked. At the same time, we've got the Federal Reserve emergency bank bailout facility usage topping $100 billion for the first time. So following the joke that was Fed data from last Friday on commercial bank deposits, which turned $28.5 billion of NSA outflows into $100 billion in inflows, the money market fund flows here and the Fed balance sheet data show that things are not looking as good for money market funds, aka the shadow banking sector. And they saw $36.5 billion of inflows to a new record high of $5.45 trillion. This is the 7th straight week of inflows, however. But the last 15 weeks, since the collapse of SVB, Silvergate Bank, they've seen over $635 billion of inflows into money market funds, by far the fastest inflows outside of COVID lockdowns. And institutional funds saw $24 billion of inflows, while retail topped $12.5 billion of inflows, noted here, after major drawdowns. So the Fed has some explaining to do because deposits have magically decoupled from money market inflows. You can see that here. In green is the money market fund assets, and in red, U.S. commercial banks' liability deposits. So deposits are not up, as in fact they are down, and the money is moving to money market funds. Unsurprisingly, the Fed's balance sheet expanded by $3.5 billion last week. That was the biggest rise since the bailout of SVB, which occurred here, a major pumping of money into markets. So as far as quantitative tapering is concerned, the Fed sold a minimal $2.5 billion to the lowest since August of last year, and the U.S. Central Bank had $103 billion of loans outstanding to financial institutions through their two backstop lending facilities. That's an increase of $5.75 billion from last week. This is daily, by the way. This is weekly here in every 7-day period. So that's a $5.75 billion weekly increase again. And the Federal Reserve's emergency bank term funding program surged to over $100 billion. And at the same time, you guys have seen on the stock market that U.S. equities have soared in recent weeks. U.S. bank reserves at the Fed rose once again as well. Why did the stock market go up? Because the Fed was printing money and using this borrowing window to pump markets. So what's going to change now that old Yeller, Janet Yellen, head of the Treasury and head of the plunge protection team, has a looming $1.3 trillion issuance of Treasury bills? This bill bomb is looming on the economy and the equity sector. And if everything is so fine and dandy in our economy and in equities, with regional banks at 3-month highs, why would they need to borrow $100 billion fucking dollars from the Fed. Ladies and gentlemen, because everything is not okay. And they know this very clearly. Jeremy Grantham has said specifically that the stock market's bubble bust will only be halfway over when the Fed starts cutting interest rates, and there will be much more pain ahead. He says, "You tell me when the first interest rate cut is, and I will tell you when the second half of the pain is going to begin." So far, so if you guys know, central banks have raised rates here in the United States by 475 basis points to reduce inflation, which even Jeremy Grantham, legendary investor, tells us this risks pushing the U.S. even further into a recession. The bust of the stock market bubble that we're seeing will only be a fraction of the way complete when the Federal Reserve starts cutting rates. And this is according to GMO founder Jeremy Grantham. And he expects that to happen in 2024. So Jeremy Grantham has made his name in predicting stock market crashes, for those of you guys that are unaware. And he's definitely predicting more gloom ahead in what we're seeing, because this artificially inflated equities markets that's directly tied to the Federal Reserve bank term funding programs, borrowing window, reverse repurchase program, rehypothecations, etc., is not going to last forever. So some investors right now are looking for signs of a bull market, but that's the wrong way to think about stocks in this environment, according to Grantham. He says, quote, "Great bubbles in the stock market are different from typical bull and bear markets, meaning that it's not likely there's another round of pain ahead. Most of the decline in these great bear markets," he said, "only happens after the first interest rate cut. So you tell me when the first interest rate cut is, and I will tell you when the second half of the pain is." And as you guys may know, investors have already seen hefty losses over the last year amid rising inflation and higher interest rates, which have taken away the liquidity that previously caused asset prices to soar. Right now, you're seeing a little bit more of that liquidity get pumped into the markets as central banks raised those interest rates to 475 basis points, a move that caused the S&P previously to tank 20% last year. But Fed Chair Jerome Powell has said rates will remain elevated through the rest of the year, which is expected to hinder stock performance. But markets are pricing in only a 33% chance cut of a 25 basis point rate cut as soon as July. So as the United States follows Europe's lead into a recession, Jeremy Grantham predicts that stocks could crash as much as 50%. And his views mirror that of other Wall Street investors. And this is likely here in 2023 into 2024. In addition, the stock market is being run by pieces of shit like this hedge fund manager that has been accused of sexually assaulting 13 women, allegedly. So this guy is one of the United Kingdom's richest men, and he has been evading sexual assault allegations for decades. His name is Crispin O'Day. He's a hedge fund manager. He is a major political donor, and 13 women have alleged that he has abused or harassed them, according to a report by The Tortoise and the Financial Times. So 8 women have alleged that O'Day sexually assaulted them, and these incidents include masturbating on a stripper after a business meeting and forcing a friend's hand onto his penis between 1998 and 2021. 2 instances of O'Day's alleged sexual misconduct took place after he was acquitted of sexual assault at Westminster Magistrates Court in March of 2021. And his investment management company, his hedge fund, O'Day Asset Management, manages more than 4 billion British pounds and they took measures to rein him in unsuccessfully, supposedly. These are the pieces of shit that run Wall Street and that move markets. His firm, O'Day Asset Management, declined to comment on the sexual assault and harassment allegations, but said in a statement that it, quote, has at all times complied with all of its legal and regulatory obligations, end quote. When the Financial Times reached O'Day by phone, he said the allegations were, quote, rubbish. And that's about it. He hung up the phone on them. What has happened here, though, is that allegations of assault against O'Day raised some questions for some of his powerful associates, to which he has given a lot of money. The Conservative Party received more than £355,000 in donations from O'Day over the period of the alleged sexual assaults. And O'Day Asset Management, the company he owns and runs, donated $20,000 to the party in 2011 as well. Former UK Chancellor Kwasi Kwarteng worked for O'Day before he went into politics. And he then worked for O'Day as a consultant after he had been elected as an MP. So he went to O'Day's house for private lunches before he was appointed chancellor and announced a mini budget that generated massive profits for O'Day's hedge funds. A huge conflict of interest there with the magistrate. His hedge fund, O'Day Asset Management, even won Firm of the Year, beating 7 rivals at Hedge Fund World's equivalent of the Oscars in February. And they're based on financial performance, but they confer industry-wide recognition. Scumbags like this are what is wrong with our stock market. So, O'Day's continued public rehabilitation highlights the limitations of the hashtag #MeToo movement. They say that without standing up to him, he will do it again and continue doing it. One of the women that is making the allegations told journalists, "The number of known assaults is large enough now that we're able to validate each other's stories and face him with the confidence needed to stop his vile behavior from continuing." That being the case, aside from this scumbag hedge fund manager who is allegedly masturbating on strippers and showing his penis to his friends, there are other scumbags out there that are doing similar things while also manipulating markets, like allegedly Al from Boston. Al from Boston is a person who has been saying many negative things about meme stocks such as AMC and GameStop, and has even interviewed, Doug Sifu of Virtue Financial, who has been known to, in the past, have massive short positions on those same meme stocks. At this moment, Al from Boston has refused to meet Adam Aron when he was actually in Boston to have questions answered, neglected to access discovery while continuing to make unfounded allegations, and has refused to show proof of ownership, yet leads the charge for objectors in the current lawsuit against AMC, which is, in my opinion, a very frivolous lawsuit that is strictly a means of trying to delay the conversion of the reverse split, because it will mean a name change and CUSIP change from the AMC preferred equity shares, APE, to be converted into AMC shares, and then a reverse split of 1 to 10 after the conversion, and then a sell issuance of shares by AMC, which in the past for Ford Motor Company and others has shown to be fantastic for the stock price, as the share price has often skyrocketed after the fact of a conversion, reverse split, and issuance of new shares. And that's exactly what's happening here. As for those of you that may or may not know, the last 2 times that AMC issued new shares on the market in 2021, the stock ran up thousands of percentage points and reached new all-time highs. Al from Boston has failed to submit proof of ownership of AMC shares to the court, therefore owns 0 AMC shares in the eyes of the law. Meanwhile, has had a YouTube channel, Twitter channel, in which he has been alleged, and the pictures have been shared from women of him also sharing his pictures of his tiny micro penis with them. And again, I have to say allegedly, for legal purposes. So those are allegations, even though the pictures are available on Twitter. He also is not party to the lawsuit, but submitted 800 pages of garbage to the courts that have been thrown out by the special master. If you still follow him on Twitter or YouTube, please unsubscribe from my channel immediately. Sincerely, Marcel D. Kalinovic. Note, I used my real name, and I have shown my positions on YouTube live streams and Twitter many times, because I'm not a little bitch hiding in his parents' basement who gets paid in order to shill and pretend like AMC and Adam Aaron are against shareholders, because that is in fact not the case in my opinion. Take a look at this post from at America First 17. Amato, the special master, recommends Al from Boston's motion to examine Allegheny Fund trading history denied, and notes that he has spammed the court with 11 motions and 800 pages that are untethered to any motions. They are absolutely fed up, it seems. So this is a little small, but I will read it here briefly. This report and recommendation addresses A. Matthews' motion for issuance of stock certificate and motion for discovery of Allegheny's plaintiff trading history and investigation. Before addressing the motion, I offer a few observations. Matthew is not a party to this action. I previously recommended that the court deny Matthew's motion to intervene, and Matthew did not take exception to that recommendation. Matthew is also not an objector, as he did not submit a signed objection with proof of ownership by May 31st of 2023. However, Matthew has filed numerous motions, letters, and nearly 800 pages of memoranda untethered to any motion since April 25th of 23. In fact, the instant motions are Matthew's 8th and 9th motions out of a current total of 11. Many of these filings raise issues that are far beyond the claims and defenses in this action and improperly seek discovery and other relief from non-parties. The instant motions are no different, and I recommend that the court deny them. Plain and simple. Ladies and gentlemen, you are going to see a vast number of people that come out and try to speak up against meme stocks. Many people like Tara Bull and that girl trader Amy on Twitter have specifically stated in the past that they are paid in order to share false information in a short and distort campaign. As you can see, Doug Sifu at Dougie Large, the chief executive officer of Virtue Financial. Virtue Financial is one of the largest market makers in the world. And in the past, they have held a short position against AMC stock. Of course, he's welcoming back that girl trader on Twitter after her suspension. That is no surprise. I wasn't really going to get into it and discuss that much, but I think that it's important to note that these are the kind of people that we're dealing with. These hedge fund managers, these shills, these market makers, family offices, and prime brokers that are constantly committing crimes are people that are running and manipulating the stock market. And due to that fact, about 2 years ago in September of 2021, we decided to start developing an application, a brokerage application for people to trade stock and even crypto. The purposes of that being to allow trades to be settled on lit markets, for trades to actually make a difference in a stock price. Because currently what's happening with payment for order flow, many companies like Webull and Robinhood and dozens and maybe even hundreds of other broker dealers are taking retail trades commission free. In doing so, they are then allowing market makers to use over-the-counter trades to front-run those trades and run them specifically OTC, over-the-counter, so that they do not hit the national best bid and offer and make the proper price discovery on a stock. In addition, this allows them to front-run trades and fail to deliver very often. We currently have former NASA engineers developing our upcoming stock brokerage apps for Lit Exchange. You can check us out on Twitter at Lit Exchange LLC or on our website at litexchange.com. Lit Exchange is spelled with no E at the beginning. And I think it's very important for people to be concerned as to where they're trading, because the broker-dealers, the market makers, family offices, and hedge funds could not care less about your investments and are actively taking short positions and running your trades through dark pools, through the OTC, and into the fucking ground. So I can't wait to share this with retail investors and launch our new founders program, because I would like to offer you, a retail investor, the chance to have ownership and stock in the company. Fuck payment for order flow. Let's get lit. Go to litexchange.com if you'd like to learn more. Regardless of what you choose to do, make sure that you are properly hedged for the issues that we're currently seeing in the global economy, financial sectors, real estate, stock markets, and bond markets. Act accordingly. I wish you peace and wealth. Thank you, everybody. Let me know if you have any questions. You can drop them in the chat. But that's about it for me. I've had enough about dealing with these scumbags on the stock market, and it's time that we actually make change. That's why when you see on our website this quote from Nelson Mandela, it says, "We can change the world and make it a better place." It is in your hands to make a difference, because nothing is stopping you from going out there and creating a market maker. Nothing is stopping you from creating a broker dealer or a clearinghouse. Nothing, except it takes a lot of capital, time, effort, work, resources. But those are not impossible to overcome. And together as retail investors, we can actually make that difference. So it's up to you and I. If you actually care about what's happening on our financial markets, to make that difference. And that is part of why I hold precious metals that have been heavily shorted and traded 97, 98% in dark pools like silver and gold. That is part of why I hold meme stocks like AMC and GameStop and others that have been heavily traded in dark pools and OTC trades by market makers and broker dealers and clearinghouses. These are the greatest risks to financial markets, because prime brokers and short hedge funds and family offices have shorted them for so long that they are using every swap and rehypothecation and naked short and short marked as long and everything else to the tune of manipulation that they can to try to prevent them from increasing in price. Because the shadow banking sector, as you have heard on this channel in the past from Janet Yellen, is the greatest threat to financial stability in the world due to their over-leveraging and irresponsibility. That being said, I stand fast with retail investors and say, I still feel that we're going to be filthy fucking rich. I don't care how long I have to wait. Some people had to wait 10 years, an entire decade, for Bitcoin to go from $6 a Bitcoin to $60,000 a Bitcoin. And I don't care if I have to wait 10 years for AMC, GameStop, and silver and gold to see their true price when those shorts are actually purchased, and when those assets sold that have not yet been purchased are actually purchased, and we get a real price discovery. I don't care how long it takes. Not because I don't want my money, because I want my fucking money. Jerome Powell and Janet Yellen are going to have to get the fucking money printer out to pay our fucking money, because so many of these prime brokers and market makers are going to be defaulting when that occurs, that there's going to be no choice but for the money printer to get going in unseen fashion. That is why when you listen to the song that we play at the end of this channel every day, you hear me say, Jerome Powell, get the fucking money printer out. Janet Yellen, I want my fucking money. Ken Griffin, Doug Sifu, I want my motherfucking money, and I'm not leaving until I get it. I'm staying long because the price is wrong. I ain't selling until they fire Janet Yellen. Period. Hedge yourself. Act accordingly. Thank you, everybody. Gonna be so goddamn rich.
I think it's time to blow this thing. Get everybody in the stuff together. Okay, 3, 2, 1, let's go.
Gonna be fucking rich. I want my fucking money. Griffin, I want my fucking money. Yo, motherfucker. Holy shit, we're gonna be so fucking rich. Great. Damn it, we're gonna be so fucking rich. Griffin, I want my fucking money.
You're an original,
Hey,
aren't you?
Yellen,
Cowboy.
give me the fucking money. Get the goddamn money printer out. Casey, to answer your questions, I never claimed that those people were advocating for a yes vote. Those scumbags are advocating for a no vote because they are scared of the conversion of the reverse split and the issuance of new shares by AMC. They are filthy fucking dogs, and they are scared of what's actually going to happen with proper price discovery once it occurs, once AMC issues new shares. I voted yes, and I'll vote yes again. The goddamn money printer